All right, folks, we will be starting the full committee meeting here in just a few minutes. So if you're not here for the full committee meeting, conversations, please take them out in the hall. I think I am. All right, folks, it's 10 o'clock. We're ready to start this meeting. If you would take your conversations out in the hall or find your seat if you're here for the full insurance committee. All right, if you would please bow with me for just a moment as we begin this meeting. Dear Heavenly Father, we thank you for this day. We thank you for your love and your goodness to us, for watching over us and caring for us. We thank you for all the many blessings that you've bestowed upon us. And we just ask, Lord, that you would give us your wisdom and your guidance as we seek to go about doing the business of this committee and of the legislature. And we just ask that you would guide and direct us, and all that we do may honor and glorify you and benefit the people of this great state. We pray it in Jesus' name for his sake. Amen. All right. Well, we have this is the full committee of the House Insurance Committee. And we have a number of bills before us today. We have a sign-up sheet in the back if there are, no, I take that back. This is full committee, so we're not having any testimony from anyone. Testimony is done in subcommittee. So we've already finished the subcommittee process, and we will be hearing from the authors of the bill as they present them and entertaining questions from the full committee. So we have a number of bills before us. We just heard in subcommittee from Senator John Albers about Senate Bill 330. If you would, Senator, come forward and present your bill and just tell us anything that you would like to share with us about this.
Thank you so much, Mr. Chairman, members of the committee. If it's okay, I'm just going to have my son, Will, sit next to me.
Absolutely.
I'm very proud to bring before you Senate Bill 330, which is the Giving the Gift of Life Act. I was able to tell this, our story, because this is very personal to the subcommittee members, but I'm going to review it again for the whole committee. In August of 2020, my son, Will, next to me, was rushed to Cherokee Northside Hospital. And at that moment, when we were in the ICU and the doctor nudged me out and said, your son's organs are all shutting down and we don't know why. And we don't know if he's going to make it through the night. Is the most terrifying thing any parent ever wants to hear. Through great medical staff and the grace of God, he survived. But the next morning, he had to be put on dialysis at age 24 and have an emergency procedure done. This forever changed his life and certainly his mom and I. We were fortunate, though. We were fortunate because we are educated, super type A personalities, and we know quite a few folks. Getting onto a transplant list and then ultimately getting to the point where we were 6 months ago was extraordinarily challenging and emotional. And I'm so happy to tell you that the greatest phone call in the world I ever got was July 1st of last year when the doctor called and said, "You are the match." And then just 3 weeks later, on July 21st, 2021, Will and I walked arm in arm into Emory Hospital. And just a few days later, got to come home. Myself with one less kidney, him with one more. And 6 months later, I'm proud to report we are both completely healed. Thank you so much. It was awesome. And you know what? It is our goal now, and it's our calling, and I don't believe in coincidence, is to help other people. There are thousands of people who are in need of organs, both those who can donate them living as those deceased. This bill today, the Giving the Gift of Life Act, will literally save thousands of people's lives. And I don't know if I'll ever get to come before you again and tell you that I'm going to bring you a bill that'll save people's lives and save money at the same time. Let me take you through this bill and thank in advance. You heard testimony earlier, but the countless people, the families who are both donors and recipients, the doctors, the nurses, the medical staff, the organizations, the non-for-profits, the charities, all those that surround and help people. When we made our story public last year, 13.5 million people tuned into it. We've gotten hundreds of thousands of direct messages, comments, and prayers from all around the world, from every religion, from every corner of this earth. And now our job is to help other people. And we are, at this time, we're mentoring many families going through the same process right here. This bill, beginning in Section 1, is simply the title, and it says it all. It's Giving the Gift of Life Act. Section 2 simply works with insurance companies, and I'm so thankful for the testimony earlier that they are supporting this bill that says no life insurance would either be denied or canceled to anyone who is an organ donor like myself. There is no change whatsoever in our life expectancies. We want to encourage people to do that, not to distract them. Section 3 is we currently have a tax exemption in place for anyone who gives an organ. It was done many decades ago, and it was $10,000, and we're raising that to $25,000. We want to make sure that we're breaking down any barrier and downright incenting people to help others. And last, on Section 4, for the main parts of the bill, is it allows for businesses to apply for a tax credit up to 6 weeks or 30 business days so they can stay in their current job as if they were there and not need to take FMLA, lose their job, or have to use up all their sick and vacation time. I mentioned earlier what the savings was. The total potential cost is $1.7 million to the state of Georgia. Using those numbers, though, the average person who is in either kidney or liver failure is $250,000 per year. So the savings to the state, just based on the fiscal impact, is actually $62 million a year. I don't know about you all, but if I could get a 1.7 investment for a 62 return, I'd be doing that every day. The effective dates on this bill, working with our friends here in state government, is bifurcated. The first part, Section 2 of the bill, will go as usual on July 1st, 2022. But Sections 3 and 4 will be January 1st, 2023, so we can get the systems ready to go. I want you to know that this return on investment impacts taxpayers directly because 80% of the costs for those suffering from this are using Medicare and or Medicaid. This is a very important piece of legislation and very personal to me. I sit here today with my son alive, but our calling now is to help the thousands of others. So by your vote today, you will save thousands of people's lives. You'll inspire donors and give hope to those in need of a transplant. Thank you, Mr. Chairman. I would yield for any questions.
I believe there were a few of us that did not have your bill in that folder. I think those are being passed around now. Hang on just a moment. Okay. All of those, because everyone been provided with them. All right, we'll go ahead with some questions while the documents is being provided. They're being brought from the office now. So I have a question from Representative Gullett, number 3.
Thank you, Senator. And I'm glad everything worked out. I was following that on social media as you're going through that for you. And I can't imagine. I do have a question. One, we talked about I just got the bill too, so I'm sorry, a little bit behind on it. Is this only for certain organs? Is it for heart? Is it for, I came through, I see in line 61 talks about liver, pancreas, kidney, intestine, lung, bone marrow. Are there other organs that apply for the $10,000 tax credit? Is it just this? And is this based on a federal precedent or something? Or where do we come up with the organs there?
Yeah, thank you for your question, and I appreciate your comments. To be a living donor, there are 2 organs you can actually give, right? Which
Okay.
is a kidney, because thank God gave us 2, and with your liver, you can give a portion of it because it regenerates. So this is actually used under the National Organ Procurement Act for the specific ones that are called out, which is at the federal level. But this is put in there really for all those who are doing things when they are alive, not necessarily.
Yeah, you can't live without a heart. I get it. That makes a lot of sense. Thank you.
Thank you.
Number 5, Representative Wilson.
Thank you, Mr. Chairman. And thank you, Senator. I was also following the story in the AJC. And so thank you very much for being willing to share it publicly. And thank you for bringing this legislation. My question is about Section 3, the tax credit. Is this modifying an existing tax credit program? And if so, why? And what's the purpose of the tax credit?
Certainly. So the original one was put in decades ago, and it is a sum of $10,000. This is raising it to $25,000. Decades ago, as we know, money's worth a lot less now than it was then. So it is raising that. But even for anybody who is a donor, there are still costs involved in that, and we don't want someone to not donate. In this case, first, primarily because they might lose insurance, but then also because there's a cost to their family. One of our many folks who testified says that, what we don't want to do is we take care of, obviously, the person who's a recipient, right? And we take care of the folks that are performing the surgery, et cetera. But what we don't do right now is assist the person that's actually donating. And my goal is to increase that donor population by, an order of magnitude, because I want the transplant list in Georgia to be down to 0.
Thank you, Mr. Chairman.
Yes. Representative Gamble.
Thank you. Thank you, Senator, and thank you to your son for sharing with us. I just want you to clarify, because I didn't have the bill. I was trying to listen hurriedly. Explain to me about the employer credit for allowing the donor to take off work, and why is it limited to 30 days?
Certainly. So 30 business days or 6 weeks is the time that when you have surgery that you are told not to lift anything heavy or exert your body in fear of pulling a hernia or causing any harm to any stitches you may have, et cetera. So the typical recuperation time is in that 4 to 6 week window in total. I was actually back to work in 1 week. So in my case, that would have been very limited. However, we know that some people in their jobs, need to be able to lift things, et cetera. So that's why we use the timing modeled after the recovery for surgery.
Thank you.
Representative Mathiak.
Thank you, Mr. I would like to know about people that in the past that have donations. Does this cover them at all?
It does not go retroactive. This is only
Okay.
moving forward. Yes, thank you.
Okay, thank you.
Representative Wilson, you have another question? All right.
Senator, I'm trying to understand the employer credit as well. And the way I read this very quickly is that the employer can seek credit against the tax credit of $25,000, right?
So the $25,000 in section 3 is to the individual who was the donor. In section 4, for the employer now, that is separate, and that is really made so if I was working for you for the last few years and I either was the donor like I was, or I was in Will's cases, the recipient, that you could then work to pay my salary for that time off. So I wouldn't have to take time off and apply for a state tax credit to help offset that. So you as the business owner would not be in harm's way. Now, I'm proud to report that some businesses do this on their own already, which is wonderful, but some just simply can't afford to do that. So that's trying to bridge that gap.
And can you tell me about this reporting requirement in subparagraph E?
Which line are you on?
Line 84.
Certainly, this is the oversight we like to put in lots of bills. Representative Wilson, which just says that whenever we do tax credits, tax exemptions, et cetera, that we report back how they were used and to what magnitude. And the goal really from the fiscal side, I'm the vice chairman of the Senate Finance Committee, work closely with House Ways and Means, is to make sure that we are seeing what's happening, and then we can tweak and augment or change those over time based on the results.
I definitely appreciate you including that. Thank you.
Thank you.
And number 26, is that Representative Williamson?
Thank you, Mr. Chairman, and to Senator Albers and Representative Wilson. Those lines 88 through 91 might as well have the Albers Amendment to every fiscal bill that I've seen lately. He does a great job. He is a taxpayer champion. And on that note, I do want to ask you a question, Senator. Can you share with me again, just for everyone's reiterate the estimated cost savings per patient that undergoes this transplant to the state of Georgia in terms of Medicaid and state health benefit plan expenses? What's the average savings per patient?
Yeah, certainly. So the cost when someone is in what's called renal failure, kidney failure, liver failure is $250,000 per year, every single year. And a little over 80% of those costs are paid for by both Medicare and or Medicaid. So direct costs are paid for by all of us taxpayers. In the total amount as laid out in the fiscal analysis for this bill would cost the state up to $1.7 million. Just on that pool of people, the return is $62 million. So the offset is obviously an order of magnitude greater, because when people like Will next to me has a transplant done, that $250,000 a year goes somewhere between $15,000 and $20,000 a year.
So given that fact, and I do have the fiscal note in front of me, and it starts off at only 1.4 million, and it stays relatively flat as it's affecting the loss of state revenues. But given the senator's explanation of the dramatic healthcare savings that directly impact the fiscal, it's a net money saver for the state of Georgia. The only problem I have with the bill that is a 1-year employment requirement. I'd like to see us come back and revisit that, maybe shorten that period of time, because it's saving lives and saving money from day one. I understand the easing into it for the 1-year employment requirement, but given the good explanation and the net savings to the help we're going to be giving the citizens of the state of Georgia, the patients in particular, and the net cost savings, Mr. Chairman, I'd like them at the appropriate time. I'd like a move do pass.
Are there any other questions from the committee? If not, I will entertain a motion. We have a due pass and a second. All in favor, say aye. Aye. Any opposed? No. I hear none. Thank you,
Thank you,
sir.
sir.
Who is
Thank
going
you.
to carry this for you in the House?
Representative Micah Gravely.
All right, sir.
Thank you so
Very
much.
good.
Appreciate it.
Thank you.
Thank you. Glad you voted first.
All right. All right. My apologies. Some of the bills that we can consider today, we did not get the copies in the folders, but we are in the process of providing those to you now. Of some that we do have listed, I believe Tyler Paul Smith has a bill for us, House Bill 969. If you would like to,
Yes, sir. Thank you, Mr. Chairman. I bring before the committee today HB 969. This is a bill that the Department of Insurance brought to me, and I'm grateful for the opportunity. Basically, this is an update for our accreditation, and just to give the committee a little bit of a background, the National Association of Insurance Commissioners, it's created and governed by insurance commissioners in all 50 states, District of Columbia, and 5 United States territories. Insurance is essentially state regulated industry, and it's our preference to keep it that way as we are familiar with the needs of the citizens here in our state. Georgia receives its accreditation from the NAIC, and the NAIC develops model laws as an organization, and each individual state passes them through its own legislature. Sometimes accreditation is dependent on one of these laws. The revisions to this act in 2020, the NAIC updated its insurance holding company system model act in response to the 2008 Great Recession. There are a number of very technical changes, but overall, it provides states with more information on an insurance group's financial profile and available capital. It essentially forces insurance holding companies to be more transparent with their finances to better allow the Office of the Insurance Department to assess risk to the industry and avoid future financial disasters. Passing this model act this year is necessary for Georgia to maintain its NAIC accreditation. Passage will allow our domestic insurers based here in Georgia to avoid being potentially subject to additional requirements imposed by other states where they do business, or, Lord forbid, the federal government. And with that, Mr. Chairman, I'll entertain any questions.
are there any questions from the committee? Recognize Representative Wilson.
Thank you, Mr. Chairman. At the risk of alienating a friend, Mr. Chairman, Representative, can you tell us what group capital calculation is?
I actually have a subject matter expert here that can tell you that. Mr. Burleson, if it's pleasing to the chair, I'll let him answer that question, and Mr. Sanders as well.
That will be fine. If you would please approach the microphone. Let's see here. Let's see. There you go. Okay.
Good morning, Mr. Chairman, committee members. My name is Weston Burleson. I'm the Director of Legislative Affairs for the Insurance Commissioner's Office. I have brought my subject matter expert, Scott Sanders. He is our Director of Insurance Financial Oversight, and he can help answer some of these questions for you guys.
Yeah, so the ratio, the group capital calculation gets to the available capital in an insurance holding company. So they restrict some capital because of regulatory requirements. So it's getting to the available capital. The higher the ratio, the better capitalized the organization is. So that's basically the ratio.
He wanted to show off.
All right, we have a couple of other questions. Representative Gamble.
I don't have a question, just at the appropriate time, I'd like to make a motion.
All right. I see no other questions. All right. This is the appropriate time.
All right, I make a motion to pass House Bill 969.
Do you have a second? Okay, all right. Very good then. Representative Tyler Paul. You're good? All right. You have your bill. Take it on to rules. All right. Wait, pardon me. Too many things going on here. Pardon me. So I guess we need to take a vote. All in favor, say aye. Any opposed? One opposed. All right. Thank you very much. Appreciate it. Now you have your bill. Take that on. Okay. You think so? Okay. All right. House Bill 1059, Representative Gamble, you have a bill for us? Yeah, whichever suits you, that's fine.
Chairman, members of the committee, I have House Bill 1059, LC 520059 we're working off of today. And this deals with the offering of loss mitigation products and charitable contributions. Basically, what this bill does is it allows insurers and agents to offer loss mitigation products. So think about water leak detection devices, driver sleep alerts, young driver training, those types of things. And to also make charitable contributions on behalf of customers, which is outlined there in the bill as well. This language comes from the National Association of Insurance Commissioners model law. And NCOIL, which as you all know, our National Council of Insurance Legislators also has a model act. So currently, if an insurer or agent provides the products or makes a contribution, is considered to be an illegal rebate or inducement, which, as you know, is prohibited under the law, if the filing has not been approved by the insurance department. And so this bill is also acceptable to the Department of Insurance. We've discussed this with them. And again, I want to make sure that you understand that a loss mitigation product, it must relate to the insurance coverage offered. It must be offered in a manner that is not unfairly discriminatory, and supporting documentation must be available for the insurance department. It must also have a cost reasonable in comparison to the insurance premiums and be primarily designed to reduce claims. As far as the charitable contribution goes, those are limited to $100 per individual in any one calendar year, and that's also specified there towards the latter part of the bill. An insurer or agent may also have a pilot program for up to 1 year to provide loss mitigation products unless the insurance department objects. And the bill will help get emerging loss mitigation technology to insurers in a quicker manner than the current system that's outlined provides. So 10 states have also done similar legislation. I have worked with John Barber from the Independent Insurance Agents, and of course, Stacy Freeman, and he's here today. Stacy, if you would like to come up and be prepared for any questions that there might be, but that in a nutshell is what the bill does. And again, I want to stress that this is not rebating as these products are specifically related to lowering the mitigation and insurance coverage. So if there's any questions, I'd be happy to entertain those at this point.
Do we have any questions? I see none. Would someone like to make, that's 24?
Mr. Chairman, I was going to offer a do pass motion at the appropriate time.
I guess this is the appropriate time. We have a do pass. Do we have a second? Have a motion and second. All in favor, say aye. Aye. Any opposed? Aye. Okay. All right. The ayes have it. You have. We're good. All right. Thank you, sir.
Thank you.
I guess I get to go down for. All right.
Okay, now I'm going to be acting chairman since Chairman Lunson has a bill to provide for us.
Let's see here.
Okay.
Make sure you have it in your packet. House Bill 1021. Apparently everyone doesn't have one.
It's in the middle, so we can't do between.
All right. Very good. Yeah. All right, Mr. Chairman, members of the committee, I bring to you House Bill 1021. We're working from LC 520044. This is a bill that deals with a product that is offered in the insurance world. It's a deferred annuity contract. There are many forms of annuities offered in different ways, but we're dealing with this one particular deferred annuity contract called a non-forfeiture law. It has to do with the what occurs for those of you who may not be familiar with an annuity contract. It is a long-term agreement between the person who is applying for or taking out this particular form of annuity. It's a long-term agreement between them and the annuity provider, which is generally the insurance carrier. The product has what is called an accumulation period, where the individual pays into the account to build a pot of money that can be drawn down at a future time. Usually, as I said, these are to augment retirement or other types of income in the future. But if during that accumulation period, the individual defaults, decides not to continue the policy, then at some point the contract would have to be bought out. And these particular contracts are based on interest rates that are the U.S. Treasury interest rates, 5 and 10-year notes. And for those of you who keep up with the market, you understand that the 5 and 10-year treasuries have been paying as low as 0.1%, 0.19%. So what this is a National Association of Insurance Commissioners model law, because they recognize the problem that existed. And as a result, because of the way it's structured in code, 1% is the floor, but because of the volatility in the markets over the past several years, and the fact that the Treasury is signaling that they're not intending to, they don't believe this is going to change. They're signaling that in order for businesses to be able to continue to offer this product, they're going to have to change that 1% floor. So the NAIC Model Act calls for a 0.15%. And that's what this bill does. As I said, it's an NAIC model. It's just going to permit insurance carriers to be able to offer the product in the future. Otherwise, without the change, they won't offer it. It's not a product that everybody wants, but it's a product that meets the needs of some, particularly those who have a low tolerance level risk. So that's what the bill does. I'll be glad to answer any questions that you might have about it, but I would appreciate your favorable consideration.
Thank you. Thank you. Any questions? Seeing none at this time, I'll take a motion. We have a motion and we have a second. Are there any questions or any discussion? Seeing none, all in favor, vote aye. All opposed? Mr. Chairman, you have your bill.
All right. Get these out of the way. A lot of papers to juggle here. Yeah. All right. All right. We also have, let's see. Do we have the other bill? 1021 House Bill. Do we have that one in the folder? Okay. All right. All right. Does everyone has House Bill 1195 in the folder? Does anybody need a copy of 1195? All right. All right. Very good.
At this time, Mr. Lumsden is going to present the bill.
I have one more bill here. It was heard in subcommittee. This is also a House Bill 1195. We're working from LC 520061. Somewhat unusual in the sense that it's comes through insurance, but some years ago, actually decades ago, I guess, the ACCG, the Association of County Commissioners of Georgia, and GMA, Georgia Municipal Association, they are categorized as interlocal risk management agencies. While we're all familiar with ACCG and GMA in their broader operation, part of what they do also has an insurance component to it for their members. And as such, they are required by state law to report to the state insurance commissioner's office about the activities surrounding their insurance operation, just as all insurers are required to report to the state insurance commissioner's office about their actuarial accounting and that type of thing. So the accounting process that ACCG uses and has used for decades is somewhat different than what the law calls for. But because they have been doing this for decades, and because the insurance commissioner's office has no problem with this, and they tell me they fully support this, what we need to go back to do is allow the pass this bill, which on lines 14 provides for statutory accounting principles, which is what ACCG uses, although the law for insurers calls for accepted accounting principles. But what this bill does is simply permits them to be able to continue to report their insurance requirements to the insurance commissioner's office, and the insurance commissioner's office is in full agreement with this.
26.
Mr. Chairman, just to get my head around it, statutory accounting, all of us are familiar with generally accepted accounting principles, but I'm not familiar with statutory accounting principles, and it's not defined in the bill. I understand the goal of it, don't have any objection to it, but are we statutorily through Georgia law? Do we have a separate set of statutory accounting principles? And that's a question for legislative counsel, I guess.
Would you like to respond? Okay,
Okay.
okay, thank you. And Ms. Davis, 7. Oh, I'm sorry.
Thank you, Chairman. I looked up the definition for the interlocal risk management agencies, because I'm not one that works in your industry as far as insurance, and it said forming a nonprofit insurance fund, and it was just hard for me to picture insurance being nonprofit. So is it a actual nonprofit fund
Yes.
for local government? So, okay.
Yeah, they go to different carriers and have through the ACCG. Excuse me.
I'm sorry.
No.
Well,
Ms.
I was
Heath-
just hoping someone could define that for me, that's all.
Okay. Are there any other questions from the group? Yes, sir.
you know, I did hear legislative counsel say that it's her understanding that it's a stricter or higher accounting standard. So I would, at the appropriate time, I'd like to move do pass.
Okay, at this time, we have a motion from Mr. Williamson. Do we have a second? We have a motion and a second. Any discussion or any more questions? Okay, all those in favor, say aye.
Aye.
Any opposition? It carries.
Thank you. All right. Getting close here. Let's see here. Got that one. I guess House Bill 1222, Representative Noah Williams, whichever you prefer.
Chair, I'll sit here, and at the appropriate time, Brad, I'll ask you to come forth. Mr. Chairman and members of the committee, I present to you House Bill 1222, LC 520062. This is a bill we presented yesterday in subcommittee and discussed, and I'd like to go over it. This bill aims to bring fairness to the state of Georgia's Transportation Network Company, or TNC, insurance code, and keep them in line with the national TNC insurance model. Right now, it seems that limousine drivers, taxi cabs, they have different rules, or Uber and Lyft drivers have different rules than what the taxi cab and limousine drivers have. And we were wanting to improve this legislation for the state of Georgia. Currently, Georgia Insurance Code requires Transportation Network Companies, or TNC, to provide $1 million in uninsured motorists and underinsured motorists, I'm going to refer to as UM or UIM coverage, for TNC drivers engaged in this service. Current UIM requirements make Georgia an outlier in comparison with our neighboring states, putting our TNC insurance requirements higher than 37 other states in the country, New Jersey and New York. Under this legislation, TNC companies would still be required to continue to provide the following comprehensive insurance coverages. When the app is on and the TNC driver is waiting for a ride request, TNCs provide third-party liability insurance for covered accidents if the driver's personal insurance does not apply. And these include $50,000 per person for bodily injury, $100,000 per accident for bodily injury, and $50,000 per accident for property damage. When the app is on and the TNC driver is on the way to pick up a passenger or during a ride, TNCs provide $1 million for third-party auto liability for death, bodily injury, and property damage. UIM coverage only applies when the TNC driver is not at fault. This coverage is expensive, ineffective, and costs millions of dollars a year to provide a gross amount of excess coverage, an amount that is seldom used. We hope that you will go along with us on this bill. And I have asked Brad Nail, an expert, to come before us in the TNC industry here to address any questions. Brad, would you like to come to the mic? Thank you.
Go ahead.
Go ahead, sir.
Oh, I'm happy to entertain any questions that the committee has. I think the vice chairman summed up the bill appropriately.
All right, we have a number of questions, maybe some for you, maybe some for the author. All right, number one.
Thank you, Mr.
Representative
Chairman,
Clark, go
and
ahead.
I'm sorry I missed the subcommittee meeting yesterday. We've had a little stomach bug running its way through our family, so.
Will you stay over
away,
there?
stay away.
And I waited until I was good to make sure I was good to come back. It's what happens when you have young kids in elementary school. So so the question, I have a couple of questions. Is the first thing is the code section 33-711. And I know that's where it deals with the uninsured motorist coverage. And I know that's the state minimum that we require, that section. When was the last time that was raised? Because recently you've had a slew of technology advancements in if you just get rear-ended in today's trucks with all the sensory devices and technology built in, you're looking at $5,000 to $10,000 in just a fender bender. So I guess my question is, when was the last time that was looked at to adjust to the current technology? Inflation and medical expenses have skyrocketed too. So if the minimum is 25,000, are we sure that that's coverage enough? And I know that that's the code section and the minimum, and it's what other services like this are what they're required to carry. I'm just wondering, do we need to look at, and that might be a question for the department.
Well, in regard to the state mandated minimums on liability, the 25, 50, 25 is the state mandated. And yes, you're correct. When it was initially implemented back in the late 60s, early 70s, it was like 15, 30, 10. And then we revisited that some years later, and it's 25, 50, 25. But yes, I agree with you. Those limits are probably not in keeping with where we are today, technology wise, but we're talking that's state liability limits. What we're dealing with here in the bill is the uninsured, underinsured motorist portion of the bill, just for clarification.
Right, but it would still fall in that 25, 50, 25 area, correct?
The
50, 150.
No, the uninsured, underinsured is not required on personal automobile coverage. It's an option that you can take, but it's not a requirement.
Okay, there. So then that's the second follow-up question, is how often would this be in place? Because you're dealing with, it has to be an Uber driver or Lyft, some kind of ride sharing service, with hit by an uninsured motorist, with somebody as a passenger that's uninsured or doesn't have uninsured motorist on their personal policy, correct? Is that what I'm following? So what is the likelihood, the percentage that that's actually, that this is going to take effect? Does anybody have that?
Yeah, I can
Brad.
respond to that. Actually, in response to Representative Wilson's question yesterday about some statistics on this, I went back to, and I represent Lyft, by the way, so went back to the folks there, and they tried to get some data that's Georgia specific, and it's less than 5% of the claims that they see even have the potential to become uninsured or underinsured motorists. That's a that includes claims where the individual who's at fault is actually uninsured, but it also includes claims where there's just some potential that there could be an underinsured loss. So it's a very small percentage.
Okay. That's all the questions I have, Mr. Chairman. Thank you.
All right. Number 3, Representative Gullett.
Thank you. And I know you and I had conversations yesterday, and been in some conversations with some other people working on the bill in the past. So yesterday when we talked, this was specific for people who didn't have insurance. So if I am driving and or if I'm riding in a ride share and I have my own personal vehicle and I have insurance, my insurance is the primary. I think yesterday, I don't remember, you said that it's the primary one. I don't remember talking about secondary, but my understanding now is that this is actually the secondary insurance on the back end as well, right? So if I had $25,000 uninsured or underinsured, this would be the secondary insurance of up to $1 million of underinsured or uninsured.
As to uninsured, underinsured, it would depend on the stacking laws here in the state.
And one last question, when you guys, I guess, came into the market, this was something that you agreed to, the $1 million at the time in order to get into the market. Is that right?
It's something that we were voluntarily providing at the time. It became codified here in Georgia, even though we didn't necessarily want it to be.
Okay, thank you.
Representative Wilson.
Thank you, Mr. Chairman. Mr. Nail, the way this is currently drafted would drop the coverage from $1 million to $25,000, right?
Yes,
But
it would be whatever exactly as it's required for personal autos.
correct. And as it's currently required, it's
Yeah.
$25,000. But if that were to change, to the chairman's point,
Yes.
if we were to change that law, this would rise with that or fall with it.
Yes, sir.
I appreciate your engagement in the subcommittee hearing yesterday, and I think we got a lot of information out. Is Lyft acceptable to a number that's higher than $25,000?
Our goal here is to bring Georgia into alignment with most of the other states, with almost all the other states. And so we want to see it tied to the statutory requirements that way, when there are changes in the future, there's no need to revisit TNC separately. That gives us the flexibility from both the cost and an innovation perspective to offer additional different types of coverages as well, as opposed to sort of having our hands tied to a high limit number.
Okay, thank you.
All right. Representative Smith.
Thank you, Mr. Chairman. I believe the answer to Representative Clark's question was, I think the last time that the limits that you find in OCGA 33-7-11 was raised around 1996 or 1997. That's the last time we've updated these. And so at the appropriate time, Mr. Chairman, just take into account that, I'd like to propose an amendment, friendly amendment to this bill at the appropriate time.
All right, we're not quite there yet, but I'll note that. And Representative Williamson.
Thank you, Mr. Chairman. To the gentleman, I'm sorry, tell me your name again, please.
It's Brad Nail.
Nail?
Yes.
Well, thank you, Mr. Nail, for the testimony, but is it not true that this is uninsured motorist coverage, as I understand it, is a voluntary coverage in Georgia? There's customers choose to add that coverage to their mandatory minimum liability coverage, which Representative Clark was referring to. Is that not true?
Yes, sir, it is.
So furthermore, is it not true that as has been alluded that if a customer chooses to carry those uninsured motorist coverages on his own private passenger, his or her own private passenger policy, that it would step in and protect in the event that there is an uninsured motorist claim? And I want to clarify that this is TNT drivers not at fault at all. Might be sitting there and is struck by an uninsured or underinsured vehicle, that private passenger policy would follow that passenger of the vehicle and step in as needed because that's the coverage that they chose on their own personal. Is that not true?
Yes, sir. Your coverage follows you whether you're in an Uber or a Lyft or a taxi cab or a personal friend's vehicle who may be struck by an uninsured motorist.
Exactly. Either entering in or getting out of a friend's vehicle. So I think that we referenced some of the other states, California, New York's the two that I remember that might have similarly high limits. But is it not true that they have revisited their bodily injury and property damage mandatory minimum liability coverages on their vehicles and is much higher than the 25 the state of Georgia currently?
Some of them have, not all of them have looked at their MFR levels recently, but there's always talk about that as well. I think a lot of states, I'd say Georgia is pretty much on the average right now at 2550. But I'd say most states are looking at whether they want to reconsider that now.
And just to clarify, as the chairman mentioned, 25,000, just to educate everybody, the 25 is called split limits. The 25,000 means that if you're driving your vehicle and you cause an accident and you're the cause of fault, your policy will only protect you up to $25,000 for bodily injury to any one person in the other vehicle. The 50 is the aggregate limit. So let's say that you are at fault and you hit the family coming from the grocery store and there's 3 kids in the car and they're hurt. The aggregate amount of coverage that's going to be paid is $50,000. And the third number of 25,000 means, and this sort of to Representative Clark's point, you're at fault, you've hit their vehicle. The most your policy will pay is $25,000 to repair or replace that vehicle. And as we all know that you can't get off the lot with anything for that little nowadays, especially even a used car. So I just want to clarify, make sure that members that may be watching on the internet or in the audience understand the relatively low limits this mandated by the state of Georgia, given the seriousness of the accidents involved. And my final question on that, is it not true that given the fact that there's such low mandatory minimum limits of liability carried by the policyholders or mandated to the policyholders of the state of Georgia, that's why it's so imperative that everybody consider carrying uninsured and underinsured motorists to protect them and their family from these accidents that may occur when people are carrying low limits of liability. Is that not true?
Yes, sir. To comment on that, certainly you make your decision at the time you buy your insurance policy, how much you want to insure yourself for. Those, what we're talking about are just mandatory minimum limits, but not a mandatory limit. Everyone can choose to buy more insurance for themselves if they want. Georgia in particular, I looked up the most recent statistics I could find, and as far as the percentage of uninsured motorists, Georgia is slightly below or slightly better than average in terms of the number of uninsured motorists when you compare state by state. So close to the average, but actually slightly better. So it's not like there's a crisis of uninsured motorists on the roads in Georgia that have to be dealt with. The questions around what should the minimum limit requirements be would be an outstanding discussion. And I'm glad we're not having it in this bill. So.
All right. Representative Shannon, I think, is online. Do you have a question?
Yes, thank you, Mr. Chair. 2 questions. Does Lyft require drivers to carry insurance? And then the follow-up question is, does Lyft help pay for any of the insurance, or is it all on the driver?
Right now, drivers must have valid auto insurance. So they may or may not have on their personal auto policies. Just like when you buy it, you can choose not to have it, but they have to have a valid policy. So it doesn't necessarily have to have Lyft does not in any way subsidize an individual's personal auto policy costs. Lyft bears the costs of the coverage that's required by statute today, the $1 million that's in the statute today.
So to be clear, you don't address at all with drivers any conversation about whether or not are they encouraged to have insurance? I understand it's not required, but are they encouraged by your company?
I would say no. And even if they did, while they are actually transporting a passenger for compensation, their personal auto policy is typically not going to apply. So it wouldn't matter what they had on their personal auto policy for that. What we've been talking about is the individual passengers. Your on your personal auto policy as a passenger, as a rider, would still cover you.
Thank you.
And Representative Gullett.
Yep, sorry, another question. And we talked about, like I said, it being my secondary coverage. What about people who are using it, who, especially like, it's not my area, but Metro Atlanta area, who don't have, they don't have a vehicle. That's their mode of transportation, either mass transportation or Ubering back and forth. If they don't have coverage, yours is now the primary, potentially on uninsured opportunity, right?
Yes, sir. I'd say they're in the same position that they would be when they're riding in any vehicle, whether it's Uber, Lyft, taxi, personal auto. They don't own a car. They don't have any insurance for themselves, so they are just in the same position in a Lyft or an Uber as they would be otherwise.
Okay.
All right. Do we have any other questions from the committee? Okay. Representative Paul.
Thank you, Mr. Chairman. Would this be the appropriate time for the proposing of an amendment?
I think we have to procedurally have a do pass before we start talking about amendments. All right. All right, we have a do pass. Do I hear a second? Second. All right. Representative Tyler Paul Smith.
Thank you, Mr. Chairman. Mr. Chairman, I'd propose an amendment of in lines 23 and 24. Towards the end of line 23, we restore the words of at least where it is struck out. We would restore that language of at least. And then in line 24, instead of 1 million, we put $500,000. That is, and strike the words in line 24 as required by code section 33-7-11.
All right. You've heard the proposal. And we have a second on the amendment. I would need to call for a vote as to whether or not the amendment would stand. I would simply point out that we have this would change the bill significantly, and it would put the rideshare platform, instead of being on par with taxis and limos, would be creating a different difference that we're dealing with here. So it seems that we have some questions before we take an action. Representative, what's your number, darling? 29. There we go. All right, you're recognized.
Thank you, Mr. Chairman. I wanted to ask the author where he came up with this amount, because it doesn't go along with the purpose of the bill. This is like outside of, we're trying to match it to what other states are doing.
Thank you for the question, Madam Chair. Madam Chair, in this legislation, this is a tremendous change in coverage of insurance in our state. You're going from $1 million worth of required coverage to, what was that in the code section 33-7-11 of the 25-50-25. That is a tremendous change to our law here in the state. A law, and as referenced in this coverage here, we haven't updated that statute since 96 or 97. This would make sure that we address that gap in updating the statute itself. And so we don't want to subject our people here in this state, the citizens of this state, to the risk of not having enough insurance coverage if they were injured in some kind of wreck or what be it. We don't want to risk them not having enough insurance coverage out there to make them whole for the injuries they may sustain.
This affects only the uninsured motorists, if that's correct.
That is correct.
Thank you.
All right. Representative Williamson.
Yes, to the chair lady's point, I laud the gentleman's concern that we have relatively low limits of liability, mandatory limits of liability in the state of Georgia, but this bill simply puts this industry on par with the other livery services in the state of Georgia, and it's basically singling out one industry for a different mandatory limits of liability. I think that is it not true that your concern speaks to the larger problem of the fact that we have not revisited our mandatory minimum liability limits since the mid to late 90s? Is that not true? So is it further not true that I'll be voting against although well-intended, I'll be voting against your motion to amend the bill.
Well, and thank you for the question. I mean, we are, I would point out though, in reference to treating them as other industries, these type of industries are, especially with Uber and Lyft, this is a fairly new creature. I guess other than Houston, I'm one of the youngest members on the committee, but I can say with somewhat a little bit of age, I didn't have the pleasure of having this type of service when I was in college, so I am that old. But this is an entirely different new creature. And, you know, this legislature has dealt with this industry, and reducing the coverage down to this amount is just not a good policy move for the legislature to make. But I appreciate the question. I respect the gentleman's position as well.
Representative Gamble.
Thank you, Mr. Chairman. I guess I would kind of feel similar to Representative Williamson's comment too about, you know, the willingness to look at 33-711 and update that if it hasn't been touched since the late 90s as a way to possibly get at what we're trying to do here. That would be my only thought. And I think Representative Clark might have hit on that as well. So that's my thoughts on this. I'm sorry. I know that's not a question.
All right. Thank you. Representative Clark.
Thank you, Mr. Chairman. So you know, with this amendment, I would like to hear from the author of the bill because it was mentioned as a friendly amendment, but I do see this as a compromise because I know the insurance concerns, but I also understand that you get hit by a car, good luck walking out of there with a medical bill less than $25,000 in today's environment, if you're from an uninsured motorist. So then I know people have to carry health coverage and all that as well, but some of these plans today, the way they are, you're high paying, you have a high deductible to meet right out of the gate just to get your insurance to come cut in. And then it's only maybe 80% of the bill. So you're still stuck with paying $5,000 for some Tylenol to take care of pain while you're in the hospital. So I understand the purpose of the intention of the bill to try to bring it in line with Georgia code. This section of Georgia code, I think, is being discussed is antiquated. It's not up to date with the current cost of living in the United States and in the state of Georgia. So I see this as a compromise, trying to understand and hear the concerns of the rideshare services and trying to help provide a good business model, because ride shares in metro areas are really the way people they don't own cars. People are they're not going to, the future is people are going to have less and less ownership of vehicles. And they're going to go more and more to ride share, especially in today's environment. It just as more unmanned vehicles come on board. I mean, that's the talk of the future, is people are going to stop owning cars. And I remember back in 2015, I think the original bill that did this went through public safety. And I was on that committee, and it was the rideshare services that came in and offered the 1 million compromise. So when they came in to bring this bill, and I would like to hear from you as well, Mr. Nell. So 2 questions. I would like to hear from the author of the bill, but I would also like to hear from the rideshare. Why, when you came in, why wasn't there a push to just put it in line with current code section instead of coming in and offering the 1 million on your own voluntarily to bring coverage to this state? So those are a couple of my questions that I have currently.
To address your second question, I worked on the bills in 2015 as well, and our proposal was to have the statute read as we're proposing today. We did not want to have a mandatory $1 million uninsured motorist coverage. At that time, Georgia, y'all have a little bit of an earlier session. If you'd had a little bit of later session, or if this had been taken up in 2016, then we would have had a model bill presented to you that reads the way we're asking the statute to read now. But at that time, there was not general agreement between us, between the insurance industry, on how the TNC insurance requirements should read. So the $1 million in UM made it into the statutes. It was not over our objection at that time. We never objected to the $1 million in liability. That we were proponents of that. We're not trying to change that at all. And that I think is the more proper focus of the statute, and that the uninsured was unnecessary at the time. And that's what we'd like to see changed.
Okay, and so to that, I understand. And that's why I think what the author of the amendment is trying to get to is a compromise here between the balance here. So, but I would like to hear from the author of the bill on his thoughts on this bill as well, on this amendment.
This bill has been properly vetted, and at this time, we're going to leave it just like it is. But thank you for your question, and I respect you.
Yes, sir.
Representative Taylor.
Mr. Chairman, I would like to move to lay this amendment on the table and go forward with the bill as it is, and let this subject of looking at all of these minimums as a separate bill, and consult with the department to look at all of these things that need to be updated. So my motion is to lay that amendment on the table.
All right. Let's see.
If the gentleman doesn't withdraw his motion to amend, I second the gentlelady's motion to lay it on the table. Of course, he has the option to withdraw, I would assume.
Representative Smith? No? Okay.
Motions, if you don't mind.
Yes, ma'am. Go ahead.
I think it would be appropriate for us to hear from the insurance department about where we are in Georgia. What does this mean? Because we're just throwing numbers around, and we don't have a basis for what we're doing. So the insurance department's responsibility is to secure the safety of our citizens. Let's hear from them.
Do we have a representative from the Department of Insurance who would be willing to address the lady's question? Recognize Weston Burleson, if you would please go to the podium.
Yes, sir. Thank you, Mr. Chairman. Thank you, committee members. I think there's a lot of truth spoken here today about the current minimums. I think they are pretty, and I think we all agree that costs of cars have gone up, costs of wrecks have gone up. The minimums are set in statute, so that would be a prerogative of the legislature. So that's a conversation we'd be glad to have with, in a future time, or whenever. I don't have numbers in front of me at the moment.
What's being proposed here? What about what's being proposed here? What says the insurance commissioner's office about this?
We don't really have a stance on this one. It's, they're referencing the existing code as it's written, the minimums that are already required of individuals. And so, I think I know it was talked about, ride sharing companies treated differently than taxis and limos. I think we are sympathetic to probably make sense to get everybody on the same page. But again, that's a separate discussion.
So you're saying get everybody on the same page and then address where we are statutorily? Is that what you're saying? I just want to be clear.
Yes, ma'am. I mean, again, that'd be the prerogative of the legislature, if that's a conversation that, I think we're talking about two separate issues here. But as far as this particular bill, we've met with the Lyft individuals and Representative Williams, and we're okay with what decision, whatever committee wants to move forward. I apologize if that's not more helpful.
All right. Okay. Representative Clark.
At the appropriate time, Mr. Chairman, I'd like to make an amendment to the amendment.
Oh, no,
And I'm serious. Instead of 500,000, drop it to 100,000. I think that would appropriately give people a good amount of coverage of uninsured motorists, but it also makes the business model, it brings it closer to what statute currently is of 25,000, but that is, in my opinion, not enough coverage. 25,000 is not enough. I think 100,000 would be a good compromise on all interested parties.
All right, we have a number of things floating here, so we need to tie some things up. We have, I'm going to take two more comments or questions. Chair Lady Taylor, 29.
I'm just looking for my motion.
Yeah, I'm
That's
trying to
all.
get there.
I'm here when you're ready.
I got it. 17. Representative Hawkins.
Yeah, I think, just to repeat what's been said over and over again, this is a bill about parity and not about what's the correct amount. I think if we come with any other number, we'll be visiting this bill again. It's still one of parity that needs to be solved. And I think the 25, 50, 25, although is another issue, something we need to solve also. So I would move the bill as is.
Last one, Representative Byrd.
Thank you, Mr. Chairman. As y'all all know, know very little about insurance, so this is all new to me. So, I mean, I know about insurance, but when it comes to changes. So for the $25,000, if you have bodily injury for under or uninsured, that's the cap that you would receive no matter what happened to your body. So we're placing, and you're all saying at this point, that's exactly for my own coverage, if that's what I have. If I were hurt, that's all that you're going to pay me, or that's what all I'm worth. I don't know. Please explain it to me, since I am not in the insurance business. I need to be very clear before I start voting on something I don't understand.
The three numbers that are generally tossed about, 25, 50, 25. That means the first two numbers deal with bodily injury. The third number deals with property damage. The bodily injury portion, the first number is per person. The second number is total per accident. So 25,000 liability for bodily injury, 50,000 total per accident, and 25,000 for property damage. So that's what those three terms represent. Okay. And you've got liability, and then you have the uninsured motorist. And we're dealing with the uninsured motorist portion of the legislation dealing with ride shares. So, okay. All right. Now we have a motion for an amendment. We have a motion to lay that amendment on the table, and we had a second from Representative Williams. Okay. What is the pleasure of this committee in regard to Chair Lady Taylor's motion to lay Representative Smith's amendment on the table? All in favor of Chair Lady Taylor's motion indicate by raising your right hand. Did you get? Okay. All in favor, all opposed to Chair Lady Taylor's motion of laying the bill on the table?
No.
This was the motion. So the motion to lay the bill on the table fails. Okay, now we're back to the motion from Representative Smith. Would you please restate it so everyone is clear on what we're dealing with?
Yes, thank you, Mr. Chairman, members of the committee. Looking to lines 23 and 24, the amendment is to restore where it is struck out in the end of the sentence on line 23 of at least, the words of at least, restore those. And in line 24, instead of 1 million, would set that at $500,000. And then strike There at the end of line 24, the following words, as required by code section 33-7-11.
All right, Legislative Council. Legislative Council, are you clear on what his proposed amendment is? All right.
Last amendment in first.
Okay. Your motion in essence,
Is to amend the amendment with, instead of 500,000, make it 100,000.
all right. We have a second. Representative Taylor? Okay. Okay, we have a motion and we have a second.
Can we then, how about discussion, Mr. Chairman?
I will recognize 26.
Amendment to the amendment, and this is a friendly question, but it's serious. Can you tell me what limits of uninsured motorists you've chosen to protect you and your family on your personal private passenger policy?
250. Because I
250
also,
what?
I'll be completely transparent, because State Farm mandates that to get a plug policy, you got to have 250, 500, 250. So I also have $1 million coverage plug, because if I carry the title state representative and I get in a car accident or something, somebody's probably going to assume state representative. He's rich. I'm not.
Now,
So
well,
I got
so
insurance.
now will you specifically, you just reference your bodily injury and property
I got
damage
a big body
liability
too.
cover.
It might have a lot more injury damage.
My serious question is, do you know what your uninsured motorist limits of liability
I
coverage
believe
are?
it's the 250. Yes, sir. You're required by, I have State Farm as my property casualty, and you're required to carry a certain minimum to have to carry a plug.
Is that correct, Representative? Okay, well, congratulations, because I would.
I love my
would-
family and believe in insurance, so.
But why didn't, I guess my question is,
That's right.
but anyhow, well,
So to
I'm glad
answer
you
your-
know,
yeah,
because
to answer your
oftentimes people do not know the minimum limits.
Right,
that
yes,
they're
sir.
carrying.
And so that's the reason why today's society is changing. There's a lot of people that aren't going to carry any auto insurance to have uninsured motorists, because they live in a metro area. And give a shout out to our friends here in Georgia. Aflac even exists, I guess, but it's, to me, I think the amendment that I've offered tries to meet the concern of both the business community with the Uber and Lyft ride shares, and that the 1 million is too high, but also at the same time, address what would probably be a proper adequate amount of coverage in 100,000. If I don't have insurance and I'm struck in an Uber car by an uninsured motorist or underinsured motorist, to properly meet the medical bills that I'm going to accrue if I don't have insurance.
At the same time, does the gentleman not concur that this is absolutely a bill about parity and not picking limits that are different for different scenarios in the citizens of the state of Georgia? Is the gentleman aware that this would be picking a different limit for a different scenario, that it's not about parity when you bring this amendment in here?
So would I agree that it's about parity? It would bring parity, but I also think the bill as the statute currently is, it's not in parity. So I think it's maintaining its current status of where it is, but also addressing the concerns of both issues on this bill. And again, I heard gasps when 500,000 was read. So I assumed that 500,000 was still too much in the eyes of a lot of committee members, and wanted to address that, because I think that 25,000 is not enough. So that's why I offered the amendment, to try to meet the concerns of, we're making sausage here, and I was trying to give it a bratwurst instead of a Polish sausage.
All right. Representative Gullett.
want to address the one thing about the parity. I think that's partially true, but I also think that the author of the bill, when he was presenting it, talked about excessive costs and to reduce the cost to the rideshare, and not so much about parity. Parity was part of it, but also I think also reducing costs to the rideshare was part of his presentation. So partially parity, partially reducing cost of rideshare. And I think this lowering it would reduce the cost of the rideshare, not as much as they prefer, and it doesn't make it in parity. So it's partially the way there, not exactly, but it's not a completely parity bill the way it was presented to me, the way I heard it. So.
All right, sir.
Need for more coverage there. But it is about there. It is about picking winners and losers. Cabs, demos. You start all over the same, or either way you want to go. I don't like it. I really don't like it on the side. Forget about it.
Yes, sir. Number 7. Representative Davis.
Thank you, Mr. Chairman. I'm listening to everyone, and I need you to know, as a critical care nurse, I saw this where it was marked through the 1 million, and I saw the statute, and I looked it up, and I saw the 25, 50, 25, and I was very uncomfortable. Because as a critical care nurse, if you come in my unit, don't even think 25,000. So I cannot vote for 25 because I work in that unit and I know what the cost is. I'm sorry.
Thank you, Representative Byrd. 17, pardon me. Hawkins, okay.
Yeah.
Sir.
This is to the author. I'm getting mixed messages here on my phone and all. So this is to the author. Is it true or not true that taxi cabs, limos, all other forms are the 25, 50, 25? So this is about parity.
Correct.
The 25, 50, 25 is a problem that we need to address in the future, but today we're talking about the parity issue. Okay.
That
Thank
was
you.
my opening statement, sir.
Yeah, well, that was an hour ago. I think we've gotten away from that.
Representative Wilson.
Thank you, Mr. Chairman. And I appreciate the comments about this is about parity and picking winners and losers. If we're just looking at the required coverage limits, sure, maybe. And I know as a lawyer on the committee, no one wants to talk about the law here, but we have already chosen winners and losers because taxi cab companies and limousine companies have a liability to the client. You can, if you are in an accident while you're in that taxi cab or while you're in that limousine, you can hold that company accountable. That is an additional party in addition to the driver that you can hold accountable. The TNCs are not like that. We have already in statute given them a free pass to liability. So the reason why this 1 million uninsured was part of the original deal is for that very reason, because we have already chosen them as a winner over the riders. So it's not about parity because they are not the same. Thank you, Mr. Chairman.
Representative Smith.
Yes, thank you, Mr. Chairman. Representative Clark, I do appreciate your amendment and where you're trying to go with it, but it seems to me that through discussion here of the members today, there's some much needed change that we need to look at to OCGA 33-7-11. And whereas I understand what Representative Clark's trying to do, still, until we are able to address OCGA 33-7-11, which hadn't been updated since 97, 96. The 500,000, I believe, would be the correct number and not 100,000 until we can correct this and the true parity of which this committee seems to be seeking here today. So I will be in opposition. No, I appreciate the gentleman's intent. I'll be in opposition to the Heath Amendment to my amendment.
Okay, procedurally, we have the Heath Amendment to your amendment that I think we need to deal with first. Correct. All right. Please restate your amendment to Representative Smith's amendment.
On line 24, where the amendment would have 500,000, strike the 500,000 and make it 100,000. And that would be just to, as an attempt to compromise the people with people on both sides of this issue. I don't think the 500,000 is going to have the will of the committee, but maybe 100,000 would.
All right. We have the Heath Amendment.
And again, the discussion could keep going. The bill still got to get through rules and still got to get through the House and still has to get through Senate. So it would
Right.
keep that amendment option being a discussion going forward.
All right. So we have the Heath Amendment. All in favor of the amendment as offered to Representative Smith's amendment? All in favor, say aye. Aye. All opposed?
No.
It's okay. What about on, let's see a show of hands. All in favor of the Heath Amendment? How about online?
Yes.
Okay, could you give us your name and tell us your vote?
Representative Shannon, yes.
Representative Cannon, yes.
Representative Douglas, yes.
Who else? Are there others online?
Representative Gilliard, yes.
And Representative Efstration?
I'm a no.
Who else? Representative Blackman? All right. Okay, so this was in favor of Representative Clark's amendment, and the total is, we have 10 in favor, all opposed to his amendment, show like sign.
Sorry, 11.
So we have 11. All right. The amendment fails by a vote of 10 to 11. Did you count my vote? Yes, you counted my vote. Okay. All right. So we have Representative Smith's amendment. And all of those in favor of the amendment offered by Representative Smith, if you would please show by hands. And online, I need you to weigh in from online.
Representative Shannon, yes.
Okay. So who else?
Representative Cannon is no.
Representative Gilliard? Okay. We got the online votes. Okay. All right, we have the votes from those online, and this was, so did we get the number of everybody in favor in the room? Do we have those? Okay. Okay. All opposed to Representative Smith's bill? Okay. So 7 in favor of his amendment and 10 opposed. Okay, we have 7 in favor and 10 opposed. So the amendment fails. All right. Now we're back to the original bill. All in favor of the bill as presented by the author, by show of hands, show us who's in favor. For the bill as opposed to so of the votes cast, we have okay, that's one. Okay. All right. All opposed by show of hands. Okay, for those online, if you're going to vote, need you to do that.
Rep. Shannon, no.
Rep. Cannon, no.
Abstention, yes.
Douglas, yes.
All right. I think we've had everyone that's online and in person to vote. So the bill passes 13-7. All right. Thank you so much for being here today and enjoying this process.